Hey there traders, and welcome back for another free video from thestockbandit.com. I'm certainly glad that you're here to watch it. So we are in part 4 here. This is the final part of this series that we've been in called The Full-Time Trader. Now, I've mentioned that one of the most common questions I get from different people is, can I trade full-time? What do I need in order to make it? What are some of the mistakes I've got to avoid? How do I get prepared to trade full-time? So what I've done is compiled my ideas on this. These are the theoreticals of what I think it takes. It's not a guarantee at all. Trading always involves risk. You can lose money. You can lose all your money. But these are some of the things that I think are highly important to consider before weighing this idea of going full-time with your trading. So in this fourth part, what we're going to do is we're going to look at this last question, which is, what things should I consider if I'm going to try trading full-time? Now, obviously, there's a lot to consider, and I've gone through a number of those, but in this last session, we're going to walk through a few primary topics here that I really think deserve some attention here before considering going full-time with your trading. So the first one is risk. Okay, now that seems a little bit obvious, but the fact of the matter is a lot of people don't weigh their comfort with risk. You've got to be willing to take on some risk. It doesn't mean that you love doing it. It doesn't mean that you're a risk or adrenaline junkie. But what it does mean is that you're willing to put on some risk in order to either lose a small amount of money or make a larger amount of money. So you've got to be comfortable with risk. You've also got to be able to accept winning and losing. Yes, that also seems a little bit obvious, but you can't be on an emotional roller coaster as a professional trader. Trust me, you will burn out much faster than you will find success or find tremendous losses. Either way, you will get so tired of the emotional roller coaster that you'll want to be willing to accept winning and losing. So you make a good trade, great. It's one of the next 1,000 trades that you make. You make a poor trade and you take a loss. That's okay. You can handle it. It's only one of the next 1,000 trades that you're going to make. So it's kind of this willingness to compartmentalize every little trade and every little result to where none of them mean a hill of beans to you individually. It's the overall collection of your trading that's going to matter to you. You've also got to be willing and able to maintain a level head. So whether you're facing tremendous opportunity or you're facing some very difficult adversity in your trading, in the face of that, you've got to keep a level head. You've got to continue to be logical and make good decisions rather than grow emotional and making poor decisions or big mistakes. Also with risk, you need to have a support network. Now, in most cases, that's going to be a spouse or family members who will support your decision to trade. You can't be married to someone who opposes your desire to trade or who opposes your attempt at trading and be able to face that psychologically for very long. It's going to be really difficult. So you don't want opposition. You're going to need some support. So make sure that you've got that when it comes to risk. Now, in terms of needs, there are a number of things to consider for what are your needs. You're going to have to figure out what your monthly cash flow is. And we talked about this in a previous video, but it's a good idea to have maybe up to a year's worth of expenses set aside for you personally, which gives you some time and some peace early on in your full-time career as a trader. If you're starting month 1 and you've got no money set aside for your expenses for a little while, then you've got to make money in month 1 or you're going to start pulling from your capital base, and that's not something that you really want to do until you really have to. So definitely you've got to consider what's your monthly cash flow. You also have to weigh what's your desire for stability, and this goes back a little bit to this idea of having a support network. But can you handle the stress that may come with having some lean months here and there? Trading involves losing. That's part of trading. You're going to have down days. You're going to have down weeks. You're going to have some down months, and those are not fun. But you've got to weigh your willingness to handle some instability over time. And you've got to consider that on the front end before you get going, because if you haven't considered it and then you come up on that situation, it's going to be a lot harder to deal with because all it's going to do is compound your emotions. Another need you're going to have is discipline. You've got to have a disciplined personality. You've got to approach your trading with discipline. You've got to be willing and able to put in the work. And we've talked a little bit about that in depth, but that's part of your discipline. You've got to be willing and able to stick to your plan. And that's part of what a disciplined professional trader does. They know what they're going to trade and when they're going to trade it. And they also will avoid the dangerous trade. They'll avoid the trade placed for the hope of excitement. Okay, the market sometimes gets in these quiet lulls where nothing's really going on and you're bored. You're flat out bored. Trading can be a lot less exciting than you think it is. And so there's that temptation there sometimes to put on a trade for hopes of creating some excitement or some entertainment for yourself. Don't do it. You've got to have the discipline to avoid that. Now, in terms of things to consider before you attempt trading, one other thing is your trading plan. So let's talk about this for a little bit. You're going to have a trading strategy that's working. That's something that's working right now. That's not something that worked a year or 2 or 3 years ago. It's something that's working right now. As you begin a full-time trading career, if that's your choice to do, you've got to have something that you can rely on to produce for you. You're going to have to be able to understand risk per trade. You're going to need to understand position sizing. If you are unable to do that, then you're putting on excessive risk or risk that's not in keeping with your capital base or your needs, and that's going to divert your plan. So you've got to be able to understand that, and that comes on a risk per trade and a position sizing basis. You need an exit strategy for every trade that you take. Now that may seem obvious, but the fact of the matter is some of the biggest losses that you might face as a trader are the unexpected ones. They might not be the biggest trades that you put on, because matter of fact, the biggest trades you put on might have the most amount of respect. So you might say, this is a huge trade, I'm going to watch it very carefully. I could get my head handed to me, so I'm not going to overstay my welcome here. But it's the smaller trades that you initiate that you may not really have a exit strategy for, that can really come back to bite you as they grow into a bigger and bigger loss and you start to compound those mistakes, because what started out as one little trade can really become a big deal. So have an exit strategy for every single trade you make. You've got to be willing to adapt to change. So the market is always morphing into something different. So you've got to be able and willing to adapt. You've got to employ some different strategies at different times. You've got to know how to trade pullbacks and breakouts and ranges, and you've got to do some reversal trades and trade the long side and the short side. You've got to be willing to stay sidelined. So adapt to the changes that the market will inevitably show you. You've also got to know, what are you going to trade? So which types of setups are you going to trade? Which markets are you going to trade? Which stocks are you going to be focused on? You've also got to know, when will you trade? Are you going to trade just the trading hours? Are you going to trade pre-market? You're going to trade after hours? And so that's another big important aspect of your plan, because you can waver from that if you haven't set it out very clearly from the front end. And you've got to know, as importantly as anything else, when you will not trade. So knowing what to avoid is every bit as important as knowing when to trade. So you've got to include that in your trading plan as well. Outline some boundaries for your trading, and if you come across opportunities that are outside those boundaries, you know that that's an opportunity not to trade. So be willing to do that. So there is a number of thoughts there over this series to get you thinking along the lines of what trading full-time might involve. So this might be your next career, but there is a lot to consider, and even after you meet criteria like these that I've presented to you, and maybe you even feel it's right, it's still a good idea to sleep on it for a while. You've got to make good decisions after spending considerable time weighing every side of it. So you just got to consider as many angles of this as possible. And if you've counted the cost and you understand pretty much what you're getting into, then you're being responsible about it rather than emotional, and that says a lot about your potential to succeed as a trader. So as always, thank you for watching this video and this series. If you missed part 1, 2, or 3, I've got links here. You can go back and view those as well. But I will see you soon with more videos. Until then, trade like a bandit.